Welcome to the channel. Today, we're diving into how to fix a bad credit score fast in 2025. Whether you're trying to buy a home, get a new car, or secure lower interest rates, your credit score is crucial. By the end of this video, you'll know how to boost your credit score quickly and effectively. Let's get started. First step in maintaining a healthy financial life is to check your credit reports regularly. This simple yet crucial habit can make a significant difference in your financial well-being. Your credit report is a detailed record of your credit history. It includes information about your credit cards, loans, payment history, and any outstanding debts. Think of it as your financial report card. Regularly reviewing your credit report helps you stay informed about your financial status. It allows you to see what lenders see when they evaluate your creditworthiness. This insight can be invaluable when planning major financial decisions. You can obtain your credit report for free from the 3 major credit bureaus: Experian, Equifax, and TransUnion. Each bureau is required to provide you with a free report once a year. Take advantage of this opportunity to review your report from each bureau, as they may contain different information. Checking your credit report isn't a one-time task. Make it a regular part of your financial routine. By doing so, you can catch and address any errors or discrepancies early on. This proactive approach can prevent small issues from becoming major problems. Errors on your credit report can negatively impact your credit score. If you find any inaccuracies, it's important to dispute them promptly. Contact the credit bureau that issued the report and provide documentation to support your claim. Correcting these errors can improve your credit score and save you money in the long run. Imagine applying for a loan to buy your dream house, only to be denied because of an error on your credit report. This scenario is more common than you might think. By regularly checking your credit report, you can avoid such disappointments and ensure that your credit history accurately reflects your financial behavior. Staying on top of your credit report is a powerful way to take control of your financial future. It empowers you to make informed decisions, improve your credit score, and achieve your financial goals. Whether you're planning to buy a house, finance a car, or simply want to maintain a healthy credit profile, regular credit report checks are essential. Remember, knowledge is power, especially when it comes to your finances. By understanding and monitoring your credit report, you equip yourself with the information needed to navigate the financial landscape confidently. Make it a habit to check your credit report regularly and take charge of your financial destiny. Next, pay your bills on time. This is one of the most fundamental steps you can take to maintain a healthy financial life. Paying your bills on time not only helps you avoid late fees and penalties, but also ensures that your credit score remains in good standing. A good credit score can open doors to better interest rates on loans and credit cards, saving you money in the long run. Your payment history is the most significant factor in your credit score, accounting for 35% of it. This means that even a single missed payment can have a substantial negative impact on your credit score. It's crucial to understand that your credit score is a reflection of your financial responsibility. Lenders, landlords, and even some employers look at your credit score to gauge your reliability. Therefore, maintaining a good payment history is essential for more than just borrowing money. It can affect various aspects of your life. Lenders want to see that you're reliable and trustworthy. When you consistently pay your bills on time, it shows that you are responsible and can manage your finances well. This reliability can make it easier for you to get approved for loans, mortgages, and even rental agreements. It can also lead to better terms and lower interest rates, which can save you a significant amount of money over time. Set up automatic payments to avoid missing due dates. Automatic payments can be a lifesaver for those who have a busy schedule or tend to forget payment deadlines. By setting up automatic payments, you ensure that your bills are paid on time every month, without you having to remember each due date. This can be particularly useful for recurring bills like utilities, rent, and credit card payments. Use phone or calendar reminders for payment due dates. If automatic payments are not an option, setting up reminders on your phone or calendar can be an effective alternative. These reminders can alert you a few days before your bill is due, giving you enough time to make the payment. This simple step can help you stay organized and ensure that you never miss a payment. If you've missed a payment, address it immediately. Life happens, and sometimes you might miss a payment despite your best efforts. When this occurs, it's important to act quickly. The sooner you address a missed payment, the less impact it will have on your credit score. Log into your account and make the payment as soon as you realize it's overdue. Contact your lender to explain and see if they can help. If you're unable to make a payment on time, reach out to your lender as soon as possible. Many lenders are willing to work with you if you communicate openly and honestly. They may offer solutions such as payment extensions, reduced interest rates, or even temporary forbearance. The key is to be proactive and not wait until the situation worsens. Communication is key. Being proactive can minimize damage to your credit score. By keeping an open line of communication with your lenders, you can often find solutions that prevent long-term damage to your credit score. This proactive approach not only helps you manage your current financial situation, but also builds a positive relationship with your lenders, which can be beneficial in the future. Consistently paying on time builds a solid credit history. Over time, your commitment to paying bills on time will be reflected in your credit report, showcasing your reliability and financial responsibility. This solid credit history can open up numerous opportunities, from better loan terms to more favorable insurance rates. In the long run, the habit of paying your bills on time can lead to a more secure and prosperous financial future. Now, let's talk about credit card balances. Managing your credit card balances is crucial for maintaining a healthy financial life. High balances can lead to increased interest payments and can negatively impact your credit score. It's important to understand how your credit utilization ratio works and why it matters. Lenders look at your credit utilization ratio, ideally below 30%. This ratio is calculated by dividing your total credit card balances by your total credit limits. For example, if you have a total credit limit of $10,000 and your balances are $3,000, your credit utilization ratio is 30%. Keeping this ratio low shows lenders that you are managing your credit responsibly. If you have a $10,000 limit and max it out, lenders see you as a higher risk. High credit utilization can signal to lenders that you might be overextended and could have trouble repaying your debts. This can lead to higher interest rates on loans and credit cards, or even denial of credit. Use credit cards responsibly and strategically. This means only charging what you can afford to pay off each month. Avoid using credit cards for everyday expenses if you can't pay the balance in full. Instead, use them for planned purchases and pay off the balance immediately. Pay off your balances in full each month to avoid interest charges. Interest on credit card balances can add up quickly, making it harder to pay off your debt. By paying your balance in full, you can avoid these charges and keep more money in your pocket. If you can't, make more than the minimum payment. Paying only the minimum can keep you in debt for a long time due to interest. Even a small extra payment can significantly reduce your balance over time. Aim to pay as much as you can each month to reduce your debt faster. Create a budget and track your spending to free up cash for debt. Knowing where your money goes each month can help you identify areas where you can cut back. Use this extra cash to pay down your credit card balances. Budgeting can also help you avoid new debt by keeping your spending in check. Reducing your credit card balances is a marathon, not a sprint. It takes time and persistence, but the effort is worth it. Stay committed to your plan and celebrate small victories along the way. Each payment brings you closer to financial freedom. Every little bit counts. Start making extra payments now. Even small amounts can make a big difference over time. Consider using windfalls like tax refunds or bonuses to make extra payments. The more you pay, the faster you'll reduce your balance. The sooner you start, the faster you'll see a positive impact on your credit score. A lower credit utilization ratio can improve your credit score, making it easier to get loans and credit at better rates. Start today and take control of your financial future. Don't close old credit accounts. The length of your credit history plays a significant role in your credit score. Closing old accounts shortens your credit history, negatively impacting your score. Keep old accounts open, even if you don't use them. If concerned about fees, see if your issuer can convert to a no annual fee option. Building a strong credit history takes time and effort. Keeping old accounts open preserves your credit history and shows lenders you're responsible. Let's talk about credit inquiries. Applying for new credit results in hard inquiries, which can lower your score. Too many inquiries in a short period raise red flags for lenders. Be strategic and mindful of how many inquiries you have. Check your credit report and score before applying for new credit. Avoid applying for credit unless necessary. Every hard inquiry can dent your score, so be selective. Consolidating your debts can boost your credit score. Debt consolidation combines multiple debts into one with a lower interest rate. This simplifies repayment and saves on interest. Options include debt consolidation loans and balance transfer credit cards. Be mindful of fees and have a plan to pay off balances. Debt consolidation can improve your credit score by making consistent on-time payments easier. Simplifying your debt repayment puts you in a better financial position. If you're struggling, seek professional help. Credit counseling agencies provide guidance tailored to your situation. Credit counselors can help create a budget, negotiate with creditors, and explore debt relief options. Seeking help is a sign of strength and commitment to your financial well-being. Don't let pride prevent you from getting the help you need. Reaching out to a credit counselor can set you on the path to financial freedom. Thanks for watching. I hope you found this video helpful. A good credit score opens doors to better interest rates and loan approvals. If you found this video helpful, give it a thumbs up and subscribe for more tips. Leave a comment with your biggest credit score challenges and topics you'd like covered. See you in the next video.